Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets, and more specifically, we're going to be looking at a lot of different technical indicators, some oscillators, some moving averages, etc., that are actually showing bearishness for Bitcoin. Now, I don't want to get you guys all worked up in FOMO and FUD over what is going to happen here to Bitcoin, but I could very easily see Bitcoin retracing around 10% down here to this uptrend of support coming over the next couple of days and on into the next week or so, in accordance with the technical analysis that I'm going to be showing you in today's video. Guys, I think it's very important for you to have a balanced understanding of the bullishness and the bearishness. It's very important for you guys to understand both cases, if you will, of which direction the market is going to go. So in today's video, I'm going to try and lay out both. And after that, we're going to be talking about Ethereum, because if you guys have been following Ethereum's development over the last several months, you will be familiar with the word Constantinople, because Ethereum's Constantinople Hardfork has been in the works for a very long time and is going live today. We're going to be talking about that later on in today's video, but if you enjoyed today's video, if you like that transition, definitely consider dropping a like, hitting that subscribe button, and smashing the notification bell, guys. It does help out the channel if you do it, and I would be appreciative if you did it. But without much further ado, let's go ahead and get right into it. Bitcoin is currently trading just a little over $3,800. If we look down here on the hourly chart, something interesting happened last night. If you go back and you watch yesterday's video, I drew this consolidation pattern, and it actually managed to be valid. Bitcoin broke very bearish out of this, which was a very bad sign, but a good sign was that Bitcoin very easily bounced up here and managed to rally out of that. If we come here and look at like the 5-minute chart, then we're going to see just how quickly this happened. Bitcoin fell very quickly. Must have been very thin order books. This happened around 3 p.m. Eastern Standard Time. And from there, Bitcoin did manage to bounce in a very strong way and rally back up to where it currently was. Now, that's actually a point in the favor of the bulls, not in favor of the bears, because even though the bears were able to crash this very quickly, this kind of crash was most likely because of very thin order books and few buy orders. But the fact that the bulls were able to come in so quickly and rally us so strongly right back up to where we were is actually a good sign. Now, the way that this could be interpreted as a bad sign is that while this did happen around 3:15 to 3:30 Eastern Standard Time, then if this were to happen at like 4 o'clock in the morning Eastern Standard Time and the entire United States was asleep, part of Europe was asleep, if you see this kind of thing happen at a time like that, you can very easily break very important levels of support. So you want to watch out for those kind of things. This managed to happen during the day, so it wasn't as bad as it could have been, but this could also be foreshadowing for what's to come. But nevertheless, we'll be talking about more of that in just a second. But I do want to talk about CoinMarketCap here for just a second, and we're going to dive right back into the TA. Bitcoin is down by 0.25% over the last 24 hours. We see ABBC coin is up 128%. Ravencoin and Nexo also in the double-digit green, and the vast majority of the cryptocurrency market here is red. Not a great day for crypto, but then again, you see these kind of days quite a lot. Nothing really to write home about there. Anyway, getting back on into the technical analysis, I do want to talk about several different technical indicators, and I'm going to start out here on the weekly chart and work my way down to shorter time intervals and try and get to the bottom of what's going to happen here over the next couple of days on into the next week or so. The first thing that I want to show you guys is the weekly chart and remind you that even though the short term is probably going to be bearish, and that's what we're going to be talking about today, I do want to remind you out here on the weekly chart that that's not indicative of the long-term future of Bitcoin. I'll show you what's indicative of the long-term future of Bitcoin. Let's go over here to the BLX exchange, the BLX chart, excuse me, this isn't an exchange. If we look here on the MACD on Bitcoin, we can see that for the first time since Bitcoin's crash back over here in 2017, right back over here when Bitcoin hit all-time high, if we bring the chart up, that's right back over there. Ever since then, Bitcoin has been very bearish on the MACD, but not as of February. As you can see here in February, Bitcoin is bullish on the MACD for the first time in a very long time. Now, we saw some bullishness over here, but we are seeing a profound amount of bullishness. Right up here, you can see the histogram on the MACD. And if you guys haven't gone through the Cryptocurrencies Technical Analysis Academy and watched the video we did on MACD, or you don't otherwise know how this histogram works, basically this right here where I just drew is the 0 level, and this histogram shows the distance between the MACD line, this line, and the signal line right here. The further apart they are, the more strong the signal. And the fact that Bitcoin over the last 2 months or so has been moving very strongly in this direction, where Bitcoin has been closing in on itself, the signal line has been closing in on the MACD line, and then quickly moving away from the MACD line in a very bullish way, that is indicative of very strong bullishness in the long term. And mind you, we haven't seen that kind of signal happen in a very long time. The last time we saw that kind of signal happen where Bitcoin went really, really bullish was back over here. And if you look at the last time it happened when it was below the 0 level on the histogram, I just so happen to have it circled on my chart actually, was right back over here in February of 2015. Now it's happening in February of 2019. About 6 months after we saw this signal, Bitcoin entered a bull market right over here in October of 2015. 2015, excuse me. So this is actually a very good sign. So the long term for Bitcoin is looking very bullish. I'm very confident in Bitcoin for 2019 moving on into 2020. That being said, I do want to talk about some bearishness that is going to be happening on the short term. And some of you guys asked me, well, Jeb, you have a very, and I specifically remember, I forget who it was, commented this on the video a couple days ago. It might have been yesterday, actually. One of you asked me, well, Jeb, if you're so confident and you do seem to have such a good take on what Bitcoin is going to be doing on the long term, because you guys know the analogies that I've drawn between 2018 and 2015, 2018, 2014, 2015, 2019, those analogies seem to hold very strong, and they seem to predict a bull market coming in 2019, late 2019, early 2020. Then why are we doing daily technical analysis? Well, there's a very simple reason for that, and that is because there's a lot of money to be made day trading and intraday trading, and it seems that you guys do enjoy these kind of videos, and I do enjoy making them. So I just wanted to go ahead and answer that question since one of you did have it. Anyway, getting on down here to the daily chart, now we start getting into some more short-term technical analysis and the kind of technical analysis that we do a little bit more often here on the channel because there's more of it to do. And while we did just see bullishness on the weekly MACD, the daily MACD isn't looking so kind. As we can see today, we are seeing a bearish MACD cross on the daily chart, and that's not exactly what you want to see. Also, what you don't want to see is how quickly the MACD reversed right here. As you can see, the MACD very, very quickly turned around and started coming back down towards the signal level. That happened when Bitcoin peaked out up here around $4,200 and blazed it all the way down to where we are currently at $3,800, and now we are seeing this bearish MACD cross. Now, this isn't the end of the world, but I think this is indicative of some short-term price action that we are going to want to be familiar with and that we are going to want to see coming. I think that what we're going to see here, and I'm going to be talking about why I believe this as this video progresses, I think Bitcoin's going to follow a trend, something like this. Perhaps not on this time frame, it might be something like this, but I think Bitcoin is most likely going to come down here and test this uptrend of support right here. And if Bitcoin breaks that uptrend of support, it'll be very bad, but we'll get to that when the time comes. But I did want to show you guys the daily MACD. I don't believe there's a moving average thing that I'd want to show you other than the fact that we are sitting above quite a lot of support on the moving averages. That is most certainly a point in favor of the bulls, but if those are broken, then we're definitely going to be moving south at a very alarming pace. Now, with all that said, let's continue moving down on our time frames here and zooming in. If we look at the 4-hourly, it flips again, and on the 4-hourly, we're looking at bullish MACD. And this is why you have to be careful looking at different time frames and why you have to take different time frames into account, because sometimes one time frame is telling you something and the other time frame is telling you another thing. Because I'll go ahead and jump forward a little bit here. The hourly MACD is looking bullish, but it's probably going to be looking bearish in about 6 hours, depending on what Bitcoin does. The 4-hourly and the hourly are looking bullish. So what this is indicative of is that over the next day or two, it may be that Bitcoin's going to move bullish here a little bit. But the daily MACD being bearish and having just crossed bearish is likely going to bring in some bearishness a couple days from now. I feel like a weather forecaster right now. On Sunday, it's going to be very bearish for Bitcoin, but on Friday and Saturday, it's going to be rather bullish for Bitcoin. Something like that is actually kind of what I'm expecting here. I think that Bitcoin's going to be somewhat bullish here over the next 48 hours or so, but in time, we're going to see some bearishness come, partially because of that daily MACD and partially because of the exhaustion of the bulls that I do think has been caused by this rather long rally that's been going on ever since really the beginning of February. I think the bulls are rather exhausted. And one thing I also want to point out here on the hourly chart was the fact that even though the bulls were able to save Bitcoin from this little crash that we saw, interestingly enough, Bitcoin went right back to where it was. Bitcoin did not start moving to the upside. A lot of times when the bulls get momentum like this and they start moving to the upside, they're just going to keep moving and they'll keep going if they actually had strength. But the bulls don't have any more strength that then is required to bring Bitcoin back up to where it already was before that little dip. So what that means is that the bulls and the bears are kind of even right now. The bears might be a little bit stronger, but we're looking at some neutrality right now, which means the technical indicators are going to be even stronger, because when the bulls and the bears are even, when the technical indicators are normally the ones to break that tie. Which is why it's very important that you guys understand and have a good gut feeling about how strong the bulls and the bears are. That's another thing we talk about in CT2A. Anyway, with that said, I did want to bring up the shorts and the longs charts. You guys know I like doing TA on them. And I want to bring up just how drastically the Bitcoin shorts have been dropping here ever since December of 2018. That being said, Bitcoin has started a little bounce here, and over the last couple of days, Bitcoin shorts are rallying again. And a lot of times when Bitcoin shorts are very low, that's actually bad for Bitcoin, because a lot of times you have to trade this in a contrarian style. A lot of times when everyone's shorting, it might be the best time to be buying into Bitcoin because the market just so happens to be at the bottom. A lot of times you see that those two things are inverse, and that might mean that Bitcoin is about to be bullish here over the next several months because the Bitcoin shorts are low. But one thing you also have to keep in mind is that when the shorts are rising, that does put selling pressure on Bitcoin, so watch out for the selling pressure coming into Bitcoin. That also being said, I want to point out that the Bitcoin longs are going down. And even though you trade these things contrarianly, you only do that half the time. Sometimes you have to trade them in the regular sense. And I know that's confusing. There is a methodology behind that. There's always a method to the madness here on the Crypto Jeb YouTube channel, but I don't have time to get into it in today's video. I do just want to inform you guys about these shorts and longs because they are things that you need to be keeping an eye on, because a lot of times when you're trying to gauge the strength of the bulls and the bears, like I showed earlier, a massive couple of red candlesticks like this on the shorts chart, or excuse me, on the longs chart, can be a very, very good idea, or can give you a very good idea of who's stronger, the bulls or the bears. So keep these charts in mind. Go do your own technical analysis on them. I always recommend you guys to do your own TA. With that said, I believe that was basically everything I wanted to cover here. I did want to show you guys the MACD out on all four time frames, and especially on the daily time frame, because a lot of times what happens on the daily time frame is indicative of what's about to come. Many people, probably all technical analysts to be totally honest, use the daily time frame to one extent or another. Intraday traders, short-term traders, swing traders, all of them are going to look at the daily chart because it's kind of just that happy medium that everybody tends to look at. Unless you're a long-term investor, even then you're probably still going to be looking at the daily chart, trying to find where your best entry is. One of the last things I want to show you guys actually has to do with the Heikin-Ashi. As we can see here, Bitcoin is slightly green over the last couple on this daily candlestick on the Heikin-Ashi, but Bitcoin is red currently and has been red for the last 4 days. That green may or may not last. We'll see what happens. But a lot of times when you see the Heikin-Ashi turn red and a bearish MACD cross happen, that is indicative almost always of some bearishness coming into the market. That is a very strong signal and one that should not be taken lightly. That is a very strong signal that should not be ignored. So keep an eye out for that. I would not be at all surprised if Bitcoin came down here and tested this uptrend of support. And in fact, I would be very surprised if it didn't, to be totally honest. I would be very surprised if it didn't. I would be very concerned if Bitcoin breaks this level of support, but we'll cross that bridge when we get to it. Speaking of bridges being crossed, let's talk about the one that crosses the Bosphorus Strait in Constantinople now, Istanbul. Ethereum's Constantinople Hardfork goes live today. That was a very weird segue, but it was the first thing that came to mind, so I guess we'll go with it. In less than 12 hours, Constantinople and St. Petersburg Hardfork will go live. Before any network upgrades are applied to the main network, they must take place on test networks such as Ropsten. Now, this is a rather short article, so I'm going to read through a lot of it. If you guys are interested, definitely consider joining the Discord server, going to the hashtag AutoNews channel there. We have a news bot who automatically posts news, and this was one of the stories that was in there. And of course, I've been following this, but this is where I got this specific article because I really do like the way that this covers this. In less than 24 hours, the world will see an upgrade of Ethereum, the second largest token by market capitalization. Let's fact check that because that seems to change by the day. Sometimes it's Ethereum, sometimes it's XRP. As Etherscan's countdown timer shows, we'll go ahead and open that in another tab and make sure that's the right link. That is the right length. We'll look at that in just a second. As Etherscan's countdown timer shows, the upcoming Ethereum Constantinople and St. Petersburg upgrade will take place at approximately 2000 hours, 8 minutes and 59 seconds UTC. Now convert that to whatever time zone you're in. The long-awaited Constantinople and St. Petersburg updates will be a major amendment to the Ethereum network, as major significant changes will be brought to the platform, improving its efficiency. There are a lot of upgrades going into this, guys. I think I've talked about Constantinople before on the channel. It's a big update and it's been long in the making. I don't have time to get into it in today's video, but I may talk about it in a lot of detail in tomorrow's video because I know this is going to be a big story tomorrow when this actually goes live. So if that is as big a story as I'm expecting it to be, perhaps watch out for a video on that where I go into a little more detail. The major altercations will have effects such as things will affect such important things as the network's core protocol specifications, contract standards, and client APIs. Constantinople and St. Petersburg Hardforks will reduce block reward issuance from 3 to 2 Ethereum, similar to how the previous fork called Byzantium, reduced issuance from 5 Ethereum to 3 Ethereum. Both hard forks have agreed to launch on Ethereum block number 7,280,000. And this right here is really important, reducing the block issuance from 3 to 2, because if you guys didn't know, Ethereum doesn't have a hard cap on how much Ethereum can be printed. Bitcoin only printed mined, whatever term you want to use, it's not really important for the point I'm making. But the point I'm also making is that Bitcoin has a hard cap on the number of Bitcoin that will ever be issued, that will ever be mined. Bitcoin has a hard cap at 21 million Bitcoin. Ethereum does not have that hard cap. So Ethereum can, in theory anyway, can just scale into infinity and hyperinflate if these kind of things aren't implemented. If for instance, there was a hard fork implemented, and this would never happen, but let's say it did, and Bitcoin's block issuance went from 3 to 50 Ethereum for every block, that would be very bad for Bitcoin because there would be hyperinflation. So I do like to see that Ethereum is reducing that reward issuance. If they can reduce it and keep the system going the way that it needs to be going, then that's good. And of course, Ethereum's been talking about moving away from proof of work for a long time, but that is a little bit in the future. Initially, it was the Constantinople Hardfork that was surrounded by hot discussions. Its launch was twice postponed because of critical security vulnerability, and this is something I want to talk about here in the video before we wrap this video up in a few minutes. The first delay was made in October last year when numerous bugs were found in the code released on the Ropsten testnet. In January, the hard fork was held off again, and it's very possible this will be held off a third time. Probably not, though. I think they've got everything together this time. This is one of the things I want to talk about especially, though. As we reported earlier, a loophole in Constantinople's hard fork software was found. That is concerning because what you're going to find is that developers tend to develop things, and when they tend to develop things, a lot of times there's a bug whenever something goes live. How many of you guys have played a video game? This game just launched, it's launch day, you're playing the game, and everywhere you look there's a bug. Well, that's because there may be hundreds of developers working on a project, but at the end of the day, those developers are human, and mistakes are going to be made. And that's not a big deal when you're playing the latest Call of Duty, but when you're working with something like Ethereum, when you're working with something like Bitcoin, and you have a bug in the code that you didn't find, and it just so happens to slip past these tests, and it shows up later, that can be really, really bad, especially in the future when much more of global infrastructure is based off of things like Bitcoin, Ethereum, XRP, EOS, Litecoin, whatever these cryptocurrencies and these blockchains are doing in the world. If there's an update released to them and they have a bug in them that has a potential security vulnerability, as this one did before it was amended, if that happens and that gets past all of the checking, which eventually you know it's going to, that could end up being very bad for the cryptocurrency in question, and that could actually end up being very bad for the global economy in question in the future. So that's something you're going to have to look out for as time progresses and when cryptocurrencies start to become much more mass adopted. When when developers and teams of developers roll out updates to these networks in accordance to whatever the adoption protocol for the development is on that particular cryptocurrency, whenever that happens and there's a bug in there, that could be extremely bad, and I suspect that's going to be a very big problem in the next 10 years or so when cryptocurrencies start getting more adopted, and one day an update is going to be rolled out that has a bug in it, and it could be very bad. Maybe it's a bug that has a backdoor in it, and someone can hack the cryptocurrency and withdraw whatever the cryptocurrency is from people's wallets without them wanting. That was one of the loopholes that we saw here. Perhaps something like that happens. It's going to be something that we're going to have to worry about, and I'll probably make a video on that in the future. Anyway, I'm going to skip forward here a little bit. We're not going to talk about Binance supporting Ethereum upgrades because you can read that and kind of get the point of what they're talking about here. But this is an interesting one. How will the upgrade influence Ethereum's price? Amid the hard forks, volatility of Ethereum's price has increased. Note the volatility, not necessarily the price action, which is not necessarily the price itself, which is mostly because of the unwillingness of traders to invest on the threshold of a change to the underlying Ethereum protocol, partially because of what I just said. After you have a major update to Ethereum or whatever cryptocurrency, there's inevitably going to be some kind of bug in the protocol. I mean, developers they do really good work. I mean, cryptocurrency is absolutely amazing. I never would have been able to build a Bitcoin myself. That being said, of course, there are going to be bugs sometimes, and you do want to be careful of that. So it's not really all that surprising that people would be a little bit hesitant to jump in to Ethereum again within the first week of this going live. The overall bearish situation on the market has also taken its toll. I believe that's a typo. On Sunday, Ethereum reached its 3-month high and a couple of hours later dropped 17% and witnessed a considerable sell-off. Yeah, that happened a little while ago. If the Constantinople fork resembles what was in Ethereum's markets after Byzantine fork, its prices should not exceed beyond a 20% drop. Then it took 34 days for Ethereum's price to break the sideways channel after the fork took place. And guys, like I said, I'll be discussing a lot more of this in 6 hours, 13 minutes, and 51 seconds, or more specifically in tomorrow's video after this goes live, if it goes live and they are happy with everything that is happening and there's not another delay. If this goes live, this will probably be the topic of tomorrow's video, so definitely hit the subscribe button and the notification bell to watch out for that. Anyway, guys, that's pretty much going to do it for today's video. Tell me what you think about the different time interval technical analysis that we've done here. We've covered 4 different time intervals, that being the weekly, the daily, the 4-hourly, and the hourly chart. And also tell me what you think about this news. Are you going to be buying into Ethereum in anticipation of Constantinople and St. Petersburg, or are you going to wait for this this predicted drop and then buy in after that? I would love to hear your opinions in the comment section down below. Let's get a conversation going on down there. I also mentioned the Discord server earlier on, so I'll mention it again. If you're not already in the Discord server, there's a link to join down below. We have a great community over there, and I would love to see your pretty face in there. But anyway, guys, that is going to do it for today's video. This is the first video in a while that's been over 20 minutes. I do want to thank each and every single one of you for watching as always, and I will see you guys in the next video. Peace.